Hey everybody, welcome in. Thank you all for joining. This is live Q&A where we answer your top questions. And I know the markets are hard, difficult, but again, just to reiterate, I invest based on research, risk, reward, and math. And the math, as a huge part of that, is probabilities and expected values. And that's what I do, and I share everything I have here. I know it's a stressful time for you all, but I'm going to help you put things in perspective and give you some confidence. But remember, investing is a blood sport. Okay, so let's jump in. Live Q&A. We're going to touch on a bunch of stuff today, all the stuff that's on your minds. So let's make sure that everything is working. Channels about math, money, and freedom. It looks like it's working. And none of this is financial advice. But the most important thing today is, and yes, click is working. Happy Mother's Day to all the mothers out there, and all the crypto moms especially, the ones that are brave and resilient and trying to make a better future for their families and their children and everything else. So well done, moms out there. None of us would be here without you guys. So I hope you get loved and respected hard today. So let's jump in. First question. If Bitcoin goes bullish again and heads back to its all-time high, what is your plan for laddering out and how much do you leave untouched? From Rhino. So first of all, talking about where we are right now with Bitcoin, sometimes I just don't get why people don't zoom out and know where we just came from. So here we are. This is the Bitcoin social sentiment. Big thank you to Sanjay for sending this to me just right before I went live. And it said, trader sentiment towards Bitcoin has fallen to severe negative levels once again. We haven't been at this level since, a bunch of times in March, a few weeks ago. So again, people are freaking out, and I don't quite understand why. Yes, it's hard. One of the regrets I had from July lows of 2021 was not buying enough Bitcoin at 29,000. But here we are. Bitcoin is a roller coaster ride. It goes up, it goes down. With extreme return, you get extreme volatility, and there's a lot changing in the world today. The monetary systems are changing. The IMF is freaking out. Central banks are freaking out. Bitcoin's here to stay. Bitcoin is the hardest asset on earth. So let me throw some perspective onto things as to why I believe Bitcoin is savings technology. And despite the volatility, I'd much rather hold Bitcoin than this stuff. And let me explain in simple terms why. I get this question a lot, and it looks like the formatting screwed up. But in 2009, when Bitcoin came about, the 2009 should be above the 8.3 trillion. We had $8.3 trillion on the face of the planet. Fast forward 12, 13 years later, we have 22 trillion. That is a massive 2.4x, 2.6x from where we were. Do you want this inflationary money in your pocket? And let me explain that 2.6x increase in the money supply. I always take about 60 to 65% of whatever you print results in 60 to 65% in debasement. Here is a simple, I don't eat McDonald's, by the way, FYI, but it's a classic indicator of the cost of living. This is the price of a Big Mac in the United States on average. Of course, it varies from state to state, but in 2009, you could buy a Big Mac for $3.57. Today, it's $7. The price has basically gone up 97%. Call it a doubling. This is directly related to the previous slide of money printing. So back to your question. Sorry for rambling. Just want to hit that home. I am not in it for an all-time high. I do believe my worst case scenario for Bitcoin in the year 2030 is about 830,000. Despite having a weak year, it has not affected my overall projections. That's a 24x from where we are today. My 10-year plan is to stack and hold Bitcoin, get as much as I can, and then use it after that to pay off mortgages and stuff like that. Now, I also plan on stacking and keeping Tesla as well, unless something changes. And on occasion, tax situation dependent, I took some hits already this year, I may swing or hedge at tops. So I'm looking at a whole bunch of stuff. Of course, I'll share with you all what I do. But I have some ability to take on some short-term capital gains because I have some short-term capital losses. So that's just the nature of the beast. Last year was an incredible year. 2020 was a mind-blowing year. And, everything goes in cycles. Again, remember, think long-term. Think the end game, think the upside to potential downside, think risk reward. I can't stress that enough. So next question is from Incognito. How long after Tesla's annual share meeting can their stock split be expected to happen? Good question. A lot of people are trying to figure that out. So I look back at history first. Back in 2020, they did their last stock split, and the board announced it on August 11th, 2020, and the stock split literally 20 days later, which was unusually fast. But the really interesting thing about that is in the 90 days after the stock split, Tesla went up 170%. It was mind blowing. I just went like that. So could that happen again? We'll see. But there will definitely be more retail interest in Tesla when it's priced at about $200 instead of where it is now. Now, my guess, my educated guess, I should say, for the stock split in 2022, they have their annual shareholder meeting in Austin, Texas, August 4th, and that's per the SEC 8K filing. And depending on market conditions, barring any gray swan events, black swan events, etc., and I know that Elon likes patterns, I believe they could definitely have the stock split within a month of that date or shorter. And that could mean definitely by August 30th, 2022. And I expect a 5-for-1 stock split. So if the price is about $1,000, if it's about $800, they might do 4-for-1 because I like to gravitate back towards about a $200 price. Where back in the day, Tesla spent a lot of time. So that's just my thinking. Could be wrong. No guarantees in this sport. But we'll see if I'm right. Let's see. Next question. If I experienced a major unexpected expense, i.e. medical, where should I pull the money from to pay for it? Cash, crypto, or equity from Gnarly Quinn? Well, I always urge people to have that emergency fund that'll carry them for 60 days of life and have ways of accessing cash in the event of a major catastrophe or a major medical expense. So one of the things, just again, everything is very situation dependent, but here are just some thoughts I had this morning. And again, it depends on your situation, your liquidity, how much net worth you have, the market, and where it is. So right now, cash is king in this market because there are some great buys. I bought 2 things last night on dips. Part of it, well, I'll talk about that later. Anyway, cash is king. Now, banks are tightening, so pulling from home equity mortgage is kind of hard to get refinancing right now, but a home equity line of credit may be an option, but the interest rates can be quite high. Now, one of the things, depending on your jurisdiction as well, I know that the US government does allow investors to withdraw money from their qualified retirement plan to pay for unreimbursed medical expenses that exceed 10% of your annual gross income. That's a very simple number to calculate. And the final point is ditch weak assets even at low prices and hold strong ones. And that means if you really do have to pull from assets, get rid of your weak ones, always hold your strong ones. Sometimes it's hard to sell the weak assets, or sometimes a weak asset may be down 80%, 75% from all-time highs, but just oftentimes they never rebound. So bite the bullet. And also there's some other other news as well I heard people digging into over the last 2 years for obvious reasons. If anybody becomes in any way disabled or some sort of chronic illness, and I'm sure maybe some things can qualify for that. And if you are in debt for medical expenses that exceed 7.5% of your AGI, you can actually able to tap into IRAs and other funds too. So it may not be 10%, it can be as low as 7.5%, but depending on the level of severity. So they are some options that I'd look at first. So next question is from John9244. Will you continue to DCA Solana? The narrative that popular chains are targeted isn't good enough anymore. Perhaps there's a larger problem with their code. So again, a reminder to everybody. Well, first of all, I'm not the Solana help desk. A lot of questions about Solana this week. A lot of stuff happened in the last 8 days. So my day one thesis was Solana was my ETH hedge. And if there was an ETH killer, SOL was it in 2021. SOL is the least worst of all other L1s by far. And per our models, Solana scores best on our crypto compendium and our SCP profilers for all the L1s, with the exception of Ethereum. It matches Ethereum in the SCP profiler and is slightly weaker on the compendium. Now, the other thing is SOL, on my recent calculations, has less than 1/12 of the market cap of Ethereum, but it's doing a lot of stuff. So I put together a very quick and dirty summary, just some random thoughts, and here we are. So the pros, obviously ETH launched 6 years earlier than SOL. The pros of Ethereum are largest smart contract platform, most widely adopted, most validators, most decentralized, least amount of regulatory risk, and they have the most TVL. Win, win, win. The weakness for Ethereum: high fees, poor scalability, congestion. For example, April 30th. Same with that date was, and date named in infamy. And 15 TPS is terribly slow, and they need layer 2s to survive. Now, Solana, the strength of Solana, and the reason why I still like it, they have the most breadth of dApps of any chain out there. They have exponential adoption, fast, inexpensive, scalable. Despite the outage, yes, I am aware it went out for 18 hours in September and 7 hours last week. But it also has Rust, most preferred development language. That's driving the most development activity on any chain. 65,000 TPS. No need for layer 2s. And Sol dApps have more daily active users than Ethereum dApps, which is kind of staggering because Ethereum has about 3,000 dApps and Sol has about 750. So I thought that was kind of interesting. Now, the bad news for Solana is it's not out of beta yet. It's outages, as I mentioned, and higher inflation than Ethereum. The Sol inflation right now is 8.47%. Rip out the staking rewards, about 5%. You got about 3.4%. It's not too bad. But Ethereum inflation is only 1%. So that's a quick and dirty summary. Am I still DCing in? Yes, I bought last night on the dip at around 75. And 75 is a very solid support floor that's been there for a long time, since August or September last year. So that's kind of where I am with that. But there's more on Solana later in this show, so we'll talk about that in a minute too. Next question is from SH from Hong Kong. What would you suggest to people who have bought into ARK funds and are now in the red? Well, this is a scary thing. And as you know, last year I was a huge fan of Cathie Wood. I still am. She's a brilliant woman. Happy Mother's Day, Cathie, out there, wherever you are. But there's a couple of things that her and I do not agree on. One was the inflation versus deflation narrative. And two, she admitted that she didn't see the Ukraine war coming. I did. And I gave it a 35% chance back in 2021 it was going to happen. And I upped that in January. But this is where the ARK fund is right now. And there's a couple of problems. First of all, you can see it's down 66% over the last 200 days. That is 2/3. And it has holdings I was never a fan of. Things like Roku, Zoom. They keep buying into Coinbase. I was a fan of Coinbase for a brief time in 2021, but I knew 2022 would be bad. I thought the DEX was going to eat their lunch, but it was for other reasons. Apparently, I just covered yesterday in my video. But they do hold things like Block and Tesla, which is kind of, Block is beaten down too, but Tesla's holding up strong, but they can't have more than 10% of their fund in any one asset. That's probably why they're not 60% Tesla right now. So from that perspective, the issue is to get back. You're in the red. If you bought at the price 200 days ago, you need a 3x to get back. So I'm not giving financial advice, but I always try and think in terms of 2x and 3x's. What's going to double? What's going to triple? What's going to 10x over the next 10 years? That type of stuff. So items that I believe could triple over the next 12 months. Ethereum, I do believe if they do move to proof of stake, they'll get a lot of institutional money again. And that will be a big boon to ETH, especially when it goes deflationary too. And hopefully it has a little bit more scalability and solve some other problems. And I think Solana could go from 75 to 225, 250 pretty easily too, as long as they come out of beta and they fix their issues and have no more outages. So again, all of this stuff has risk. Now, the items that will most probably double in a year will be Bitcoin and Tesla. I think they're pretty safe bets as well. So that's my perspective. What to do is, it takes courage and bravery to shed losers, and it takes even more courage to get rid of them after they're down so much. But I just jump on a faster train. That's always my methodology. And I'm becoming more and more ruthless, not holding anything hostage at all, except for the best assets. So next question is from Kylie1. Thoughts on Power Ledger? With the movement for renewable energy, mining, etc., it would allow peer-to-peer energy trading on the existing electrical grid. So let's dig into this. So for those who are not familiar with Power Ledger, it is basically the idea of a crypto asset that is backed by energy. It is founded on the idea of using blockchain to democratize energy by providing a way for energy producers to sell their excess electricity. And it's kind of what Tesla's doing actually with their auto bidder. I think they're testing that in Australia right now. And the vision is to unlock stranded renewable energy resources and improve the energy sector by making renewables cheaper and more easily accessible. That's the whole vision. It's very difficult to achieve this, though, in the real world. So the question is, this is a little graph if anybody wants to dig into more exactly how the power platform works. What you do, you have an ERC power token. See, Ethereum is behind everything. And that allows the platform, when there is a minimum hold of the tokens in order to interact in the marketplace. It's like kind of a membership card to a gym or something. And once you can convert power tokens to their native Sparks token, Sparks are the internal currency used as a medium of exchange for buying and selling energy, in a peer-to-peer way. And you can burn Sparks in exchange for power tokens once you want to get out as well. And from an investor standpoint, even though this looks very simple right here, it is very complicated. It's going to take a long time for it to take off. I think you're better off investing in a stable coin for yield or a Bitcoin right now. So there is some value dilution in the actual platform too. So from that perspective, interesting concept. I think it's too early right now. Next question, excuse me, is from Schutz. Regarding the number of validators in each project, what is more important, validators or NFT gross? And what will increasing validators do for the Solana project? I'm glad you asked this question. So validators are critically important. They are far more important than any gross revenue or anything else, because they have direct impact on security and decentralization for a network. And decentralization is the essence of what makes crypto unique. Now, these systems are designed to have no single point of failure, and making them more resilient to outages and attacks. Now, furthermore, decentralization also prevents one individual or group from taking over a chain, and they also can enact changes at the expense of the majority of participants in the actual chain itself. Now, in a proof-of-stake blockchain, validators are the best metric to determine decentralization. The number, the distribution, the ownership of validators, the percentage of tokens staked, the number of staking pools are metrics we look at constantly when we evaluate projects based on decentralization. Now, the greater number of validators, token stake, distribution, etc., the harder it is to disrupt the network. Now, there are some issues just to point out. For example, you could have Solana. They have, I think about 1,720, 1,730 validators right now, but 22 of them control about 33% of the network, and that needs more decentralization. So it's not only the number of validators, but the concentration amongst key validators is very important to look at. And that's why we look at these number of nodes. Now, related to that is we have the top chains ranked by the number of validators. And this is the quick ranking right now of all the top chains. The top 5, Ethereum number 1, by far the biggest heavyweight gorilla, over 250,000 validators. Elrond is number 2. Cardano is number 3. Solana is number 4. Algorand is number 5. Avalanche is number 6. You can see also in some cases, the longer the chain has been around, the more validators they will have by virtue of the fact. And I think Solana right now is adding more validators at a quicker rate than any other chain out there. So they know they want to get as high as possible. But remember as well, when I had my conversation with CTO Larson, I posed him this question. I said, what is the critical mass, critical number of validators to determine if a chain is decentralized or not? And he said, once it's over 1,000, it doesn't matter. So these top 5 are all over 1,000 validators. So hope that helps. Next question is from MX3, Midas Investments staking platform. Your thoughts on this platform? So first of all, let's jump in. Just for those who don't know what Midas is, you all know Celsius. Celsius is a centralized version of Aave for lending and borrowing and yield, etc. Midas is a centralized version of Yearn for yield aggregation. And that's simply the best way to describe it. So yield aggregation automatically generates yields based on rebalancing and shifting capital to different opportunities automatically. Now, Midas has different products. It has a stable yield automator, masternode yield automator, and a bunch more. And Midas will automatically rebalance funds to earn the best returns or use pool capital to bring about the best result. But there are risks. Now, the downside of Midas are you have to give up your keys and deposit crypto into a centralized platform. And if you want to earn interest, you have to take on that risk. And that is what you were getting paid for. Remember, there's no free lunch in crypto. these guys have to make money as well. And there were also fees associated with Midas. And according to their fine print, there is a 5% fee of your balance when withdrawing your crypto. Yikes, that is pretty high. Now, regulatory risk, this is probably the most important one. There is a huge risk right now. Obviously, centralized platforms are easy to attack. They've got lots of attack vectors from the SEC, and the SEC is going after these CFI, centralized finance platforms, fast. We saw news about BlockFi and Nexo and Celsius, etc. And now for net new customers, they're no longer allowed to earn on their deposits. Now, also another important factor is rug pulls. Although they seem very reputable and have been around for a bit, you always have to keep that in the back of your mind. Not saying that there is that type of risk, but just beware. Again, preserve capital first, earn alpha second is the point. So that's our take on that one. Next question is from Savage Pig. What steps do you see Solana taking in combating these DDoS attacks? So there wasn't the DDoS attack. It was just huge congestion. It was bots trying to get access to NFTs. That's what happened 8 days ago now, I think it is. So what the team are planning, or there's a whole bunch of things, but what we see and what they do, we don't know what's going to happen, but these are the recommended steps to prevent DDoS or spam attacks or bot attacks, whatever you want to call it. One, increase decentralization by increasing the number and distribution of validators is super important, just like we discussed previously. A DDoS attack on the top 22 validators can lock up the entire network. That's why I mentioned it before. Now, that is why you want a large number and why distribution of nodes is so important. Second, a fee-based priority execution model would be important, especially in preventing the outage that happened the other day. And since Solana transactions are so cheap, it's easy to spam the network. Instead of having a first come, first served model, the fee-based priority will give users a way to express the urgency of their transactions. Kind of a little bit about how the ETH miners work. And users would be able to specify an additional fee to be collected upon execution of the transaction to speed up the inclusion in a block. And this ratio of the fee to the requested compute units will serve as a transaction's execution. And third, they are implementing Quick QUIC, which is a communications protocol designed for asynchronous communication that has a flow like TCP. And this will allow for more optimization and the ability to ingest data into the platform. So that's kind of what we see happening. They did say that's not that difficult to do, and they're going to do it real soon. So I do believe, you remember, once Solana comes out of beta, all these things will become a thing of the past. It still is in beta. Remember that, everybody. Next, is there a proof that bots are dominating trades, and how would this effect cause a crypto capitulation? From Google, very interesting question. So first of all, are bots taking over? We think the narrative about bots taking over crypto is a little bit overhyped. Now, trading crypto is already risky. Trusting a bot service just compounds the risk for the trader. And that being said, though, equity markets are algo/bot driven today, but they're a lot more mature. And second, bots are susceptible to hacks, security vulnerabilities, and technical outages. And since bots service providers need to connect to your exchange accounts in order to place trades, they have access to your money. This makes them juicy targets for hackers. Further, the trader must also trust that the bot operator is honest and their OPSEC is top notch, or else the trader can completely lose their funds. So be careful of that. And the third part is it's very difficult for bots to adjust to changing market conditions. Bots are typically great at implementing a trading strategy or taking advantage of very small inefficiencies or arbitrage possibilities, but you can only replicate that in specific trading conditions. And when the market changes and that strategy is no longer valid, bots are not able to adjust to that as well. And remember, finally, every seasoned trader struggles with this. When conditions change, you have to adapt. The other simple way to do it is just zoom out and focus on the end game and just let your DCA strategy take over. Now, with the crypto market conditions at this time as well, even faster, and with the manipulation that happens from whales, etc., bots are going to have an even harder time. So I don't think that is a very, very big issue right now. And in fact, if you look at just the extreme volatility in Bitcoin. It went from 35, called it 35,000, dipped down to 33.7, and back up to 34.6, 34.7, just in a matter of hours. So again, have your plan. My plan is real simple when it comes to things like Bitcoin is you layer in every time it goes down to my key level, I triple the amount that I invest. So that's the way I look at it. So finally, all your contributions and our donations, we have a little family here, considering it's Mother's Day. We have Sarah. She was found in a water well when she was rescued and airlifted back to safety. And she's now a proud mother of a 4-year-old, Solar. So we have Sarah and Solar. Happy Mother's Day to both of them. And a big thank you as well, everybody. Hope you like the content. I'm going to do some questions now. And hope everybody's doing okay. So let me jump in, switch cameras. And boop. Let's see what the questions are. Give me 1 second. And a big thank you as well to all the great moderators and just this whole community. I know it's a very, very stressful time for everybody. But remember, we're still $1,500 more than we were on January 23rd. And could we hit 29K, the summer low of last year? Maybe. But the odds of us going higher are higher than the odds of us going lower. And the expected value, just do that math, everybody out there. So let me see, Ron B. I just bought Google at 2,300. I'm waiting for Tesla under 850. It hasn't hit. It came close. Should I buy now? Yeah, do the strategy, Ron, of kind of thirds. Like, you know, I know worst case scenario in 10 years, Tesla's going to 10x. It's worth 1,600. You're buying at 850. That's an easy double. So just, you know, bite the bullet. I did say 750 to 850 would be super juicy to get some. And I've said that pretty much all year. We got 844 on Friday. So you must have not had a limit order in. Drop a limit order in for 851. I do expect some volatility next week. You know, inflation numbers will be out. I'm hoping they come out under 8.5. But remember, it's easier for that to happen, as I covered in a previous video. So fingers crossed, if the print comes out above 8.5%, markets could really tank. So beware of that, everybody. Now, next question. How do you harvest cash when you're 40% down on everything, or best to hodl? So what I'm doing right now is so a lot of my positions are short positions. So those short positions suck up a lot of margin. So I'm covering them. I covered half of my Tesla puts on Friday, and that opened up a lot of margin that I can use for different options, either to sell more puts or buy stuff. That's if you don't have options though, what I do is I look very carefully at my portfolio and I boot whatever it is. I look down the back of the couch and imagine I've got some account like Voyager and I have some holdings on there, and I just look carefully as like, what's going to do better? What should I flip it to? Look at a pair model and then move to a different asset, and then just collect on debts that are owed me, and just dig up wherever you can. Save. Don't go out to fancy dinners. Don't buy new cars or anything like that. That's kind of how I do it, and I hope that that helps as well. The other thing is as well, I know it's a brutal time right now, but again, we've been here before many, many times. I think the difference this time is the stock market has really come down, and that's why you can see the resilience of Bitcoin. And again, as I've said before, there are people waiting to buy at 32K. That's why we're like last time we didn't get even close. We had war thrown at it on Feb 23rd, and it stayed up pretty much high, a little bit lower than it is now. And then we had the January 24th sell-off as well. And then we had the summer doldrums. So we should all be very experienced and, you know, used to this by now. And again, where are we going? Yes, we could go down to 29K. It would be the summer low. Probably will stop a lot before that. I'd say 32, maybe on a big nasty wick, a big whale manipulation. If they see a whole bunch of leverage longs, they could wipe them out and dump a bunch of tokens on the marketplace and then buy them back up immediately. That's where you have your sniper rifle, your limit orders in place. I've got mine in place now. I have been buying at 35, buy again at 32, and I'll buy back up the truck at 30 if we get that low, because I know where this thing is going, as I covered at the beginning of this. So Artem, where do you see Sol if Bitcoin will be at 30 to 32K? What would be good entry points? So 75 has been a historical, very solid bottom for Sol right now. And if Bitcoin is not far off of that the 32K level. In fact, let's check now. It did have that little dip and it rebounded right back up. And that's what you see I've been saying this for a while, but there are times in market conditions that people that manage large amounts of money, that say, okay, I need to have a 2% allocation to Bitcoin. I need to liquidate my treasuries and bonds, etc. I need to move it somewhere. What am I going to buy? There's very little things. A lot of stocks now are very cheap as well. So they're probably going to make a small allocation to Bitcoin, and snagging it at 32K is great. Again, my regret from the summer is not buying more at 29K. Now I get it. Maybe a second bite of that apple, which for me is exciting. And again, everybody just zoom out. This is the chance as well for many people. I got some very good messages of a whole bunch of people who became whole coiners over the last 5 or 6 days, that they weren't able to do it before, but now they're able to close up that last 10th of a coin or 20th of a 20% of a coin. So from that perspective, so 75 is very strong for Sol. If we do have that wick down, you could see 65 on Sol very easily. And also with the news about Luna today, huge amount of volatility was injected into the market, but that's when I grabbed a little bit of Luna last night too as well. Crypto Papi, that was it. Did I just do one for you? No, Crypto Papi. So where is all of the sell pressure coming from? Also, does the Fed have a Bitcoin wallet that they deposit confiscated Bitcoin to? Yes, the Fed do have a Bitcoin wallet. I don't know what it's called. Somebody tracked it down recently, and they estimate that the Fed could have as much as 100,000 or 60,000 Bitcoins. But what they also do is they auction them off to people like Peter Thiel bought them in the past. I just don't know what that wallet is. If they're smart, they probably have many wallets, so it's not that traceable out there. And I know that they picked up some Bitcoin from those two scammers. I think one was a rapper or something. And that's where it is. The sell pressure itself, I think it's just retail investors capitulating to a large extent. A lot of people are looking, it's like, okay, I'm really nervous now. Again, when you read, I actually avoid I used to be kind of spend some time on Twitter. Now I just avoid it because it's so full of negativity, and I try to stay positive. But with the type of stuff that people are saying, there's just doom and gloom everywhere. And it's like, we've been here before. We know where this is going. This is, I always see this as an opportunity, not as a reason to freak out and just get rid of everything. But there are people as well that they might be leveraged longs. We had some cascading losses hit this week as well. There was $400 million in liquidation, I think, the other day, and $330 million two days before that. These are the people that are being liquidated and have to sell. And there's other people that may have margin calls in the stock market, and they may have to sell Bitcoin to cover those too. There's also people that use Bitcoin as collateral to leverage trade as well, both for equities and crypto. So that's where I think a lot of the sell pressure is coming from. But again, looking at the wallets I covered yesterday, the 1,000 to 10,000 size wallets, up and to the right. The 1 to 10 Bitcoins, up and to the right. So at least people are still accumulating. And again, supply crunch is going to come. We just don't know when. So thank you for the question, Crypto Papi. Cellar Door, Bitcoin is 5 figures and we have 4-figure daily shifts. When Bitcoin is 6 figures, will we have 5-figure daily swings? That would be nuts. Well, that's a great question, Cellar Door. I did say that, in this cycle, we'd probably see a $10,000 candle in a day. So Bitcoin is going from, like, if it got back to, say, 68K, it could very easily go from 68 to 78K. That'd be a $10,000 candle. So that would be an example in reverse of your 5-figure swing before we even hit 6 figures. So I believe that's very theoretically possible. And yeah, it would be nuts. And this is why we're trying to focus more on more tools to really help take advantage of this as well, especially when it comes to kind of arbitrage opportunities between pairs and uncorrelated assets, because then you can make a killing. As long as you can have a decision support system to give you the confidence to jump in and do that. So Cellar Door, we're going to have those we could have 5-figure candles before we hit 6 figures. I believe it's possible. And remember, I think it's 90 days over the past 12 years is when, or 87 days, 82 days is when Bitcoin made 90% of its gains. So if you're not on the train during those 90 days, you miss. And that's why I don't mind layering in increased layers all the time going down, because I know it's going to a 6-digit asset. And I even covered yesterday, if no more money comes into Bitcoin by virtue of debasing the currency, in 8 to 10 years, Bitcoin's going to 150K anyway. Worst case scenario, which is the 4x from here. So thank you for the question. Courage, the cowardly dog. What would the purpose of stablecoins pegged to $1 once fiat goes to zero eventually? Exactly. So that's super interesting. And, I think stablecoins are just a vehicle by which to park money for yield while you're stepping out of the market. Think of it as a swing trade pair. It's like, okay, I'm in Bitcoin now. Bitcoin hits a new all-time high. Time to bounce, get out, park the money in stablecoins, and park it back into Bitcoin when it dips again. So that's what they're used for. I always say, I don't like holding fiat for more than 3 months, or I get very nervous. As you guys know, back in late last year, I was very nervous and moved to 30% cash. I did a whole bunch of harvesting, got rid of a whole bunch of crap, and I'm glad I did that. And then I jumped into the market hard on 2 occasions. But now we're back, or worse than where we were before back then. So, timing is everything. But from that perspective, I was nervous. I didn't want to hold cash for, it would have been 130, 140 days now. That would just freak me out, especially with the debasement where I know it's at least 15%. But if you're getting 10% in your stablecoin, then that offsets some of the debasement and loss. That means you can do it for longer. But at the same time, nobody in their right mind is going to hold stablecoins long term, because even at 10% or 15%, you're probably still losing or very close to it. So eventually, the world will become completely Bitcoin denominated, or some other crypto asset that is more valuable, or people will move to commodity-backed assets that go up based on demand. It could be an oil-backed asset, for example, and that's where I think is the future. But the dollar hegemony dominance will go away in the next 8 years for sure, I believe. That's not a bad thing against the dollar, but they're just printing too much, and they have to print to keep things afloat. One Brightum, what do you believe the SOL floor will be now? So, as I just mentioned, so many questions about SOL. That 74, 75 level, it hit today. In fact, it went down to $74. And if we go back, let me pull up the chart. Hopefully I have got the annotations on this. So I did say way back in, I think it was early March this year, I said 75 looks like a very good support level, which actually, that's how I leave all the stuff in my chart. Let me share this with you, actually, because then you can see exactly what I'm looking at. And hold on, juggling too many things here. I want to make sure it does show up. Yes, here. So you can see here, when you look carefully at the chart, the $75 level, $74 level, give or take a couple of dollars, is the 0.786 support level. And that's where it has been bouncing very strongly for now. And we were back here in August 21st. That's when it met it as resistance, and then flipped it to support. So since then, it's been acting as support, which is the bones of 9 months right now. So we'll see. But again, as I said before, if we did have a big tanking of the markets, Bitcoin going to 30, 32K, we could easily see Solana down to 65, and that's the back up the truck time. Because we saw actually just not too long ago, we saw Solana between the 13th of March go from $75 up to $145 in the space of a couple of weeks. So it can double in a few weeks from that level. And it did that a few weeks ago. So that's where we are. So with that, I think, is that all the questions? I don't even know how many I've done at this stage. Let me pull it up. Crypto Creed. What is the best entry price for Luna? I grabbed a little bit yesterday myself at 62. During the crash, it's 66 right now. But remember, Luna is extremely risky, ladies and gentlemen. extremely risky asset. I just have I just bought a very small amount yesterday. And again, I'm trying to harvest as much cash as I can. But of course, who could pass up a $62 Luna? And if you look at some of the conversations going around on Twitter right now with Do Kwon, it's hilarious. Either he's getting very sensitive or very nervous or hiding something. So I'm trying to read exactly what he's trying to say with his messages. But he's been trolled hard right now, especially with all the curve stuff that's happening as well behind the scenes. That's probably worth a video unto itself. So with that, everyone, I want to thank Kiwi Robin and Jeff Hammer and Cropcraft and Wixie Snipes and somebody's mother. Thank you for this original team for being there. I know it's a hard time, but there'll become a day we'll be cracking bottles of champagne when things go crazy again. So Huckleberry Nate as well, thank you so much. And we will see you all tomorrow.